Hello, everybody. Welcome to XM live trading session in the beginner's room for candlesticks and chart patterns session with me. My name is Junaid Vahid, trader analyst in Forex and Structure. Started trading back in 2011. Here we are with the candlesticks and chart pattern after 15 years of active market trading. This session is designed to share a little bit information about candlesticks, chart patterns, combination of candlesticks, chart patterns. So let's say broad price action understanding, so be able to read the market behavior through the price using the best indicators, candlesticks, chart patterns, levels, and everything that helps us. I am a price action trader. I'm trading price action for more than decades, like 13, 14 years. I'm using broad price information, not only candlesticks. I do use candlesticks from both Eastern and Western ways because the candlesticks are actually Japanese candlesticks starting from long time ago in Japan. Japanese traders that are trading rice, they created those candlesticks, which are actually genius. It's not so much um, information, but it's enough to give us the information what happened in the session. And then Western world took these candlesticks and then changed their, names, the understandings, simplified them quite a lot. That it's not bad. Not that we don't like it, but it's kind of today it's read differently in the market. So I'd like to take the original candlesticks with the real way to read them, understanding them, and then if there is a setup that I can also consider as a Western technique setup, like a pin bars, inside bars, outside bars. In the Eastern technique, it's hammer formation, shooting stars, engulfing bars, harami patterns, 3 line strike bullish, 3 inside bar, 3 white soldiers, 3 black crows, morning stars. There are way, way more detailed candlesticks that are coming from its creators, right? So both are good. We just need to understand them and studying them separately. They are not the same thing. So we should not use classic pin bar together with morning star in a mashed potato environment. Like it must be separated, understand it separately, and then we will be able to use it way better way. And that in the context of the chart patterns and market cycles, trend analysis, it really gives us huge edge and helps us to trade with high probabilities. And I hate to say accuracy, but it helps. Really, it helps with timing. It gets better. So I see some people in the chat showing first Boyke. Hello, Juni. Boyke says, hello, Boyke. What is the accurate indicator Forex, says Mark? That's a great question. There is no accurate indicators. Um, the session is designed for candlesticks and chart patterns, but since the question is related indicators, I suppose it's technical indicators like moving averages, relative strength index, MACDs. I'll share just a couple of words about it. Technical indicators are mathematical formulas that are calculating some historical data prices and gives us the information. So which means that technical indicator cannot work without the price. Price comes first. Indicator calculates it and gives you information. It's not about accuracy or trading or signal as most of people believe it's. Indicators are just mathematical information that gives us so we can interpret it and put it in a strategy, in analysis, whatever we're going to use it. It's not like this indicator must be traded buy, sell, right? Indicators are not for trading directly. Indicators are information to recognize historical patterns. We believe that can work in the future. So we trust them statistically, and we think that they will bring still high probability. Can be a little bit saying that it's a behavioral analysis, but at the same time, it's pure statistics and the environments can be completely different and the logic might really break there. So that's why technical indicators there are no best indicators. There are no accurate indicators. Technical indicators must be combined correctly by not using highly correlating indicators because you are just using confirmation bias rather than anything else. You need, good filters, understanding the price behavior, and use them all together. Later on today, at 4 p.m. platform time. Now it's 1 p.m. platform time. So at 4 p.m. platform time, we're going to start a session, The Art of Technical Indicators and Price Action, Mark. If you want to learn more about the indicators and the relationship with the price, feel free to join my sessions exactly 3 hours from now, again here in the beginner's room. The name of the session is The Art of Technical Indicators and Price Action. Okay, this session we focus more on price only, like candlesticks and chart patterns. I'm going to bring you more information related to that. I love to show you how do I read the markets through the candlesticks and chart patterns. I think this is the invaluable information, not only learning pure theory, because theory is good. I can say it's bad, but theory without practice, it's useless. You just know a lot, but can't do anything. So when we learn a little bit theory, and then we go for practicing it and see how on the live chart must be done, then the brain starts working completely different. The way to learn is getting better. You increase your, you multiply your experience by watching, not by only um, experiencing you at alone. So you can still do your work on your computer, on your platform, but doing it together with me, it's also helping you a lot to increase your experience and knowledge. Okay. Do you have questions related chart patterns and technical indicators, or chart patterns and candlesticks, guys? If you have, let me know in the chat. I'll be very happy to answer all of them. Again, I like to divide candlesticks in different categories. Like we have Eastern, this is going to be Western. Eastern techniques. Western are inside bar, like pin bars, inside bars, outside bars, and that's the strategies that Western technique is using mainly. They also use engulfings quite a lot, together with Fibonacci's, with levels, with technical indicators, chart patterns, and etc. Eastern technique is mainly focusing on the broad candlestick information, because candlesticks are bullish, bearish, trend continuational, trend reversals. They can be support and resistance. The candles are the support and resistance on the chart. So in order to be the strong support, the prior candle must be strong reversal. So these are actually, there are some criterias in the Eastern technique that are very good, that can be actually um, learned as a directly understanding the market behavior, and you can create your own trading strategy based on that. There is no specific strategy to trade. Candlesticks are not strategy. Indicators are not strategy. We can create strategy based on this information. So strategy can be based on the current market conditions, can be like learn it by heart from somebody else. There are many different strategies that we can use, but the best thing is to understand the market behavior. While you're understanding the market behavior, you can use your success trading principles, how to become successful in the financial markets. How we can become successful in the financial markets. Is it thanks to the candlesticks, chart patterns, or indicators? Of course not. That's a little part of the indicators, of the strategies that can help us to generate trade idea, to understand market behavior. But the success, actually, the core, the the success comes from managing the risks. Okay, understanding first. You cannot manage the risk if you don't understand them. Yesterday we had a session about risk management, so today I'm touching it. Like if you were in my yesterday's session, you probably learned a lot of things about risk management in the previous sessions. Now you need to understand market behavior so you can generate trade idea. When you generate trade idea, you risk profile this trade idea. After you risk profile this trade idea, you execute it, and you are already prepared with your plan for management. You manage the position. If price goes against you, what you do. If price goes in your direction, what you do. That helps you to eliminate the emotions, the stress, the fear, the greed, and you just focus solely on your strongest part. That is what you educated yourself for: generating idea, risk profiling, managing the position, and exiting successfully. Okay. Thought is the next to join how to read candlesticks in smaller time frames. Fantastic question. Let's do it live. And also want to say big hello to all our friends in YouTube watching the sessions. You can join our session, guys, by just joining XM, opening xm.com, log into your account and find live education. But for that, a little bit later. Now let's focus on the charts. Go open the trades that we have, smaller time frames. What do you mean, sir, by saying smaller time frames? Is 1 hour small time frame for you, or 1 minute, or maybe 5 minute, 15 minute? I can do that for all time frames because candlesticks are not time frame dependent. They are trend dependent, price dependent, not so much time based dependency they have. So if I have to read the same instruments, I'm going to show a couple of time frames for you. Let's go with the daily. All right. So what do we got on the daily chart for gold? I'm having fantastic profit on gold, and the previous best trades that we did on gold last couple of days was 10,000 pips profit from declining gold price. Unbelievable. I don't remember time in my trading career for last 15 years where I'm making with 2 trades or 3 trades 10,000 pips, real pips profit. It's not points, it's real pips. It's 100,000 points profit I made on gold with 2, 3 trades recently. That happens because of the crazy gold volatility. It's absolutely crazy volatility we have on gold. I think it could be even bigger than the post-COVID times where the spreads were widening crazily. Like we were having 200 pip spread back then. So it was crazy movements, but it was stuck. It was difficult for trade. Now markets are so clear and easy for trading. Not great for investors, maybe because of the deep corrections and vulnerability of the gold market coming from the bond market. When yields are surging, gold tend to decline, and yields are surging because of the fear of what happens around the Middle East and more fundamental factors, right? Right now we have massive movements. It's easy for me and for most of probably price action traders because it's clear patterns and very clear candlesticks formations that we have. All right, let's zoom in and show you the big time frame, and we're going to go for a lower time frame to see if there are some difference of reading candlesticks. Again, I'm saying candlesticks are not time frame dependent. They are trend dependent, meaning if you have candlestick, reversal candlestick formation in, let's put it like a shooting star. We have learned all of the candlesticks on the previous sessions one by one, sometimes cumulatively, sometimes one by one. We put different focus on the previous candlesticks and chart pattern session for last months and years. I hope you are all familiar with the candlestick formations. If not, let me know in the chat. We might start learning them again from the next session. We take a couple of candlesticks in the beginning of the session, then we read them on the charts, and that's how we can learn every Wednesday, every week, so we can gain more knowledge about them. So we have shooting star. Let's say if this is somebody considered as shooting star as per the strict criteria, that's not a shooting star. It's a high wave candle with bigger bearish rejection from the top side because the lower shadow, it's a bit larger. If it was just smaller, then it would be a shooting star, but still it gives us a big rejection from the top before the price reaches the previous all-time highs. That suggests weakness on the market, that something is happening. And then what we need the next session or candle on the daily chart to confirm the weakness of the bulls, and the bears are taking control. They are getting in charge. So this gap that has formed, first session, tried to fill it, but failed. Often happens. But the next session managed to close the entire gap, suggesting that the bears are significantly stronger than the bulls, and the bulls are taking profits and running away. And that's creating lower low in the internal cycle. This is the last impulsive move up. This is the prior impulsive move up, dark cloud cover that didn't materialize because price never confirmed by breaking down below the previous structured low, and it made a nice lower low. Even though it was a false breakout, still price managed to go significantly low. The problem with this rejection comes that it forms at the previous level of resistance that is acting as support. So we are not very confident to say pattern wise that this is going to continue to the downside, since it's hitting the previous resistance, respecting is as support. We are like, what's happening here? Will the market respect the previous resistance as support and boom, gonna go up? This was a scenario. And then we wait to see price action wise or candlestick formation wise. This is a evening star pattern on the daily, fantastic bearish sell signal, which is lower than the previous structure high. As a chart pattern, you can say the second high lower than the previous one, happening first time in the bullish trend. It's a massive bearish signal.